Welcome, everyone, to the Planet MicroCap Showcase Virtual 2022. I'm your host, Robert Kraft, and I'm really excited to introduce our panel here for this event. This panel is titled Thoughts for 2023 An Accounting Perspective, and it's hosted by Neil Levine from Marcum LLP. We're very thankful to Markham as a sponsor for our event. And with that, Neil, take it away.
Well, thanks, Robert, and I am happy to be here for maybe the 8th year as the moderator of the accounting panel in both the virtual settings and in person. So again, I'm Neil Levine. I'm an assurance partner at Marcum LLP. Today, we're really going to discuss what public companies may face in 2023. So time really flies. The conference has really grown. And Markham and my former company, Friedman, have been part of this, and we've served the various attendees and clients over the many years. So you may recognize me as the former co-chair of the SEC practice at Friedman since 2010. And I'm proud to announce, as Drew did as the first time, and I'll introduce Drew, that the formal merger between Markham and Friedman did take place September 1 of this year. And I'm happy to bring you Markham, which is the 12th largest accounting firm in revenues with over $1 billion. I serve mainly now as a relationship partner, and I'm proud to say that we do have the 5th largest SEC auditing practice in the country with over 500 public clients. Our firm has over 3,500 professionals in 46 offices to serve our clients both internationally and domestically. And we do serve those clients on the various exchanges such as New York Stock Exchange, NASDAQ, and some of the OTC markets, the CSX, the CSE, and the TSX. So I'm delighted today to have my following partners serve on this panel. I've known these experts for over 10 years each: Brian Kearns, Sviatlana LiPuma, and Drew Bernstein. All three have served on this panel before, so at this point, I'd like to introduce them, and they can say a few words about themselves and the services that their teams provide. So we'll start off with Sviatlana. Go ahead, Sviatlana.
My name is Sviatlana LiPuma. I've been with Friedman, now Markham, for about 15 years, working in capital markets. We do a lot of regular registrants, regular reporters, as well as transaction work, companies going public, M&A transactions, etc. Different industries, from technology to life sciences. Love assisting the startups, companies going public.
Thanks, Sviatlana. Drew in the corner there, go ahead.
My name is Drew Bernstein. I'm one of the co-managing partners and co-founders of Markham Asia, formerly Markham Bernstein and Pinchak. I've worked in China for the last 25 years. We've opened our new office in Singapore in May of this year. And as you mentioned, we had the merger with Friedman, which was really great for our firm. And we changed the name this year to Markham Asia. So that's a little bit about our practice.
Thanks, Drew. And Brian?
Sure. Brian Kearns. I've been in, with Friedman, now Markham, for the last 8 years. I've got 21 years total experience in the industry. Again, like Sviatlana, I serve on the capital markets group. A lot of public companies, both already public and going public.
Thanks, Brian. So let's get to some of the questions, guys. Sviatlana, we'll start with you. And after Sviatlana is done, if anybody has something to add, we'd like to keep this lively. So Sviatlana, what is the current market outlook regarding the uncertainties in the IPO markets that we're experiencing today? We see a decrease in SPAC activities, and firms are revisiting reverse mergers and alternative ways of going public. Can you please talk about what you think in 2023, whether those markets will be opening again?
Yeah, sure. As you mentioned, SPACs were very popular last year. They're originally viewed as the more efficient, timely, cost-effective way to go public. However, with some regulatory pushback, some restatements, you may remember the warrant issue that warrants were deemed derivatives, had to be fair valued, and also underperformance for most of the SPACs, with some exceptions. The investors kind of their appetite cooled off. So in early 2022, we saw the interest in IPOs, traditional IPOs, rising again. Fast forward to today, everyone is obviously bracing for a recession, but markets are still open. We get a lot of opportunities almost every day. What I notice now is a lot of our clients are very selective. They put a lot of thought into which vehicle they're going to choose to go public, whether it's IPOs or SPAC, or believe it or not, reverse mergers. And I haven't heard this term for a long while, because it traditionally hasn't been very popular. It was deemed to be a less attractive way by investors to go IPO, but we've heard it for quite a few clients.
Great, thank you, Sviatlana. So Brian, as an SEC partner, we've seen public companies and their auditors, and I wanted to bring this topic about, the regulators and to be mindful, and the clients listening to this. So why don't you just give us a brief overview of what's happening, with the regulators and what these clients need to think about?
Sure. We've just finished up, or have been finishing up, PCAOB inspections, both in Friedman and Markham here. And one of the focuses we've seen recently is on, auditing of projections. And so as the PCAOB is putting a focus on our ability to audit projections, that puts a bigger focus on companies to be able to put out, more supportable projections. I know in the past it was, hey, let's throw some projections on what we're going to do for revenue in the future. And, as long as it made sense, it was okay for the audit. Now they're putting a lot of pressure on us to get support behind all the different assumptions that management's using and develop these projections, really, digging into discount rates and, I guess, making sure that the projections themselves, have either contracts behind them or some sort of reasonable basis, and not just management's best estimate. I know there's been a big focus on the PCAOB comments across all the firms really in this area. So that's one of the big focuses nowadays.
Great. Anyone want to add anything to that?
Well, I can add, Brian and Neil. I completely agree with Brian. What I've noticed also last year and this year as well, there's significant focus on significant estimates, any inputs to those significant estimates. There's less focus on testing. That's probably the easiest part of the audit. The harder part of the audit is any sort of valuation, review of those inputs, methods used, et cetera, et cetera. So that's the focus. And very often when the clients ask us why you ask me all this information, the reason is we require first, we require to do that. And second, we know that that's the focus of PCAOB. So we want to make sure we're compliant with all the provisions and all the requirements.
Thanks, Sviatlana. So Drew, nice to see you.
Good to see you, Neil.
I want to congratulate you for leading right now maybe the #1 China/Asia audit practice really in the world, with, I guess we're going to be doing close to $75 to $100 million in revenue. So congratulations to you and your team. So with that said, what are the opportunities, Drew, for investors who are at this conference today? I saw that there were some Chinese companies on the agenda. What are the opportunities for investment now in China/Asia today?
That's a great question. And, many of us, we read many of the articles that we see in the papers today, and none of them are all too optimistic. And I always found that kind of interesting because most of the people writing these articles actually haven't set foot in China in 3 years. And with all the bad news that you read about China, the numbers actually just don't support it. Shanghai was the #1 market this year in the world. They outbeat, NASDAQ, New York Stock Exchange. They had the most listings. #1, solar panel companies, manufacturers of car batteries, EV car batteries, in China. So when we look at the market there, I actually see basically there's 3 plays, at least, that we're looking at right now. And from what we see, investors also. #1 play is Southeast Asia. And when I talk about Southeast Asia, we're talking about Indonesia because of the demographics. You have a population of about 270 million people with an average per capita income of about $4,000. And I say you can swim to Singapore practically, where it's 60,000. Also, you have the age. In China, a large majority of the population is over 55 years old. That number is closer to 35 in Indonesia. We're seeing places like Vietnam, where the transfer of technology between the United States and France to Vietnam is pretty free. They speak English, they use US systems, and you're seeing a growing number of unicorns in Southeast Asia right now. There's between 20 and 50 unicorns. We're also looking in places like Malaysia, Philippines. So I think Southeast Asia is one play. The second play would be the decarbonization of China. If you want to talk about decarbonization in the world, just don't even think about it if you don't have China sitting at the table, because #1, they account for roughly 25 to 30% of the world's carbonization. And they're also the largest manufacturers of solar panels in the world and largest producers of EV batteries for cars. So I think that's also a big play in China right now. The third play, I think, is going to be consumerism in China. As we've seen in the United States, when the United States opened from COVID, we saw massive spending. And China's been locked up for 3 years. So I think at the end of the day, it's going to be the Chinese consumer that actually saves the day from them. So I think those are the 3 main opportunities we see right now, for investors. Although it's a hard play. The stakes are up and it's going to be a lot harder.
Thanks, Drew. I do have one follow-up to that. So when the companies are ready to trade, Markham Asia, are we bringing them to the US? Are they trading here? Or are we also representing some other exchanges?
We're working on 2 lines of business there right now. Obviously, the audit business and the consulting business. So we do not sign opinions on any other exchanges other than US exchanges.
Got it.
But we do consulting work for companies that are public on many exchanges, Taiwan, Singapore, Hong Kong, because many of those companies, we assist in memos, internal controls, because many of those things are identical on the other exchanges. And even the SGX right now, which is a Singapore exchange, has agreements now with both NASDAQ and New York Stock Exchange. And if you want to go public now in Singapore, you can use GAAP-based financials or IFRS. The idea being that sort of what companies did in the old days by, listing over the counter, where they could kind of understand the groundwork and grow and then move up to the big board. So that's kind of what we're seeing there now.
Thank you. Sviatlana, moving over to some of the companies that we're looking at. What are some of the challenges the companies going public are facing today? And I know that on almost every call that I'm on, one of the things we say is, do you have a consultant? So we might have had 5 calls this week, and the first thing we do is say, hey, we have a consultant if you need one.
Yeah. So the challenges, Neil, are always the same. What I find that the companies that are successful are the ones that are thinking ahead. They have a very clear plan, very clear understanding, and follow up on the timelines, and having the right team built around them. Currently, what I would do, I would prepare for a long process, a lot of unexpected changes in the markets. Markets are very volatile currently. We have clients that are put on hold until the markets pick up. And as soon as the markets pick up, they expect it to be ready and ready to go right away. The second factor you mentioned is assembling the right team that includes the officers responsible for financial reporting or consultants. That's very important because their expertise and their responsiveness will affect the timelines. One thing I wanted to mention is the resources. When you look for a consultant or a legal team and select the legal team to represent you, you want to make sure that those companies have available resources in your timelines. And the last but very importantly is having secured financing for the whole process. Very often we see companies that have some financing but only gets them through half of the process. And you find them scrambling in a very short window to get those funds. And very often those companies will have to settle for terms that are less favorable to them just because the timing is so tight.
Neil, I think you raised probably one of the most important things for anybody listening to this today that's going to take a company public. The importance of having a good internal consultant, for me, is absolutely critical, especially for young companies. And I can tell you that one of the biggest complaints that we always hear is how these audits stall sometimes. And, it's not done quick enough because everybody wants it done yesterday. But the fact is that we're just auditors. We just check things. We actually don't touch anybody's books or records. We don't get involved in company management. And if a company is properly prepared, the audits almost always go smoothly. Young companies don't typically have the kind of resources that they need. And these consultants actually act as a bridge between the requirements that a young company has to meet with regulators and the time it takes them to hire qualified people. And I'm sure you'll see, isn't like one of the first things, especially on a foreign company, that you see in an SEC comment letter. The first question is, who prepared these financial statements? What are their qualifications? And for a young company, that's a hard thing to answer. And when you have great consultants, they actually bring all the problems and everything up front before you get expensive lawyers and accountants involved. And when you know the problems up front, that's how you can save time and money.
Exactly. Thank you, Sviatlana and Drew. So Brian, moving ahead to you. After we got done with the pandemic, we noticed that a lot of our audit procedures were being done online. We don't have to schlep, we don't have to run and count inventories a lot of the times anymore. So how do our companies maintaining controls, and what challenges is this posing from an audit perspective for both the companies and the auditors?
Sure. Yeah, you mentioned the inventory thing too. I know we've, because of the pandemic, we did skip doing a lot of inventories live and in person for a little while there, but we're starting to get back to doing that. As the world's opening up a bit. The Zoom is good for smaller things like that, but not when there's a lot of inventory to go count. So we're trying to get out there more in the field now and do that. But as you said, with more and more companies doing a lot of their transactions online, where there's not really a paper trail to be had. There's not like a purchase order that's placed, where there's signatures and, there's not a lot of paper trail, like I said, to look at from an audit standpoint. You really have to rely on these companies' systems and their platforms for the data, especially for recognizing revenue. And one of the things that we, have seen lately is a lot of companies use third parties to handle these, either whether it's a platform or monitoring their revenue online for them. And they don't necessarily have insight into the controls at some of these third parties. So there's a big focus right now on making sure that you're getting SOC 1 reports to see the controls are being maintained at these third parties, and then also that the companies are reading what the controls they have to implement in those SOC 1 reports are and implementing those controls on their end. So, because the third party can only control the data that they're provided. So if you got to make sure you're providing valid data for them to be able to process it properly. And a lot of companies don't either have SOC 1 reports or know who to get the SOC 1 report from, things like that. So it's definitely drawing a challenge from an audit standpoint as the world goes online. So getting your clients to start talking to their third parties about getting SOC 1 reports early rather than later is going to be a big thing going on.
Thank you, Brian.
Sure.
Getting back to Drew, the PCAOB has taken a hard line with the China Asia companies, whether they could get there and inspect, and taking a hard line with the auditors. So what's going on we just heard that now PCAOB can go out there and just give us a history of
I think you got
what's happening.
I think you have two different kind of events going on at the same time.
Yeah.
One, you obviously have the inspection process that was taking place in Hong Kong. And you also have this kind of holdup of the small cap Chinese companies by NASDAQ and the SEC. So, those are two very separate issues and actually pretty simple. In the second case with the holdup was basically around the fact that you had this group of Chinese companies and sales companies that promoted these companies, and the stocks of these companies within a week of trading or so went up anywhere between 200 and 3,000%, and then dropped back down. That's highly unusual. So I can understand at this point why at least NASDAQ has, held up with the SEC the listings of these companies until they can understand how that happened and why it happened.
Well, Drew, this hasn't been every company. But I guess there has been enough.
Well, there's been a fair amount of them, and there's also been a bunch of these sales companies. There's this purported blacklist around right now, where these companies, are on this blacklist. I haven't personally seen it, but, purportedly it exists, and they're just holding those companies up for now until they can find out what happened, whether it was inside trading or whatever the issues may be. So I can kind of understand that at this point. And the truth is, Neil, a few years ago, we actually did some analysis and on these different kinds of companies. And, what we found was in that particular year, I think if you invested in all US IPOs, you probably made like 75% on your money. If you invested in Chinese IPOs, it was probably 7%, if, roughly on your money. But when we started to peel back the onion and really look at it, and we started to separate out the companies that were, say, raising north of 125 million, the return for the Chinese IPOs was closer to 90%. So I can understand how a lot of these issues were probably with the smaller companies. with respect to the inspection, I don't have any direct line into the PCAOB, and I don't know if anybody else does. That would be great to hear. I mean, I know we have a number of staff that used to work for the PCAOB, but unfortunately, they've been very tight with everything, so nobody knows. You know, my hope and my belief is that they probably didn't get 100% of everything they wanted, and I'm sure they burned all the midnight oil they brought with them. But I think at the end of the day, that they probably got much of what they needed and that they were satisfied, and I'm hopeful that they're able to recertify. Because if they're not, that's going to send a lot of tumult into the markets.
Yeah, well, Drew, in the beginning of this year, there was a lot of the major, I guess, governmental Chinese companies delisted themselves, right?
Well, we knew that. I mean, you had that list of, I don't know, I guess it grew to maybe 180 or so. But we knew on that list that there was a number of companies that were either companies like SOEs, state-owned enterprises, companies that had investments by the government, that we understood that those companies were going to have to delist. So, I mean, that was not a surprise. A large part of the other companies, as we saw, there was an article in the Wall Street Journal that mentioned our firm yesterday. 51talk.com had switched from Pricewaterhouse to Markham to basically get out of that bind of using a Chinese firm to do their auditing, even though inspections are now taking place.
Got it. Thank you. Sviatlana, talking about how does a company, you know, there's 50 companies presenting tomorrow and a bunch of attendees watching this, choosing an audit firm, right? So Neil Levine, I started my old audit firm, I don't know, way back in 1998, and it was very different back then. You know, the regulators were a little more friendly and we did the best we could. So I have a couple questions. You know, what does a company today, when they look at an audit firm, do they look at their technology? Do they look at their fees? I see some of these small firms are continually going out of business. There's a lot of consolidation. So if I was a company, you know, I know you get what you pay for, but how do you choose an audit firm these days? I mean, are your CEOs that knowledgeable? I mean, what do they need to know about having a partnership, so to speak, with a audit firm?
Absolutely. So what firms always look for is the value for the money that they pay, right? And that comes with expertise, right? They want to find the accounting firm that has the expertise in the industry, as well as in capital markets, where it's M&A transactions, transactional work, etc. What I would make sure is the firm as a whole can have expertise, make sure that the audit partner that will be doing your audit, as well as that office, has expertise as well. Resources are very important. So when you look for the auditor, make sure they have the resources in the timeline that you plan to go public or you need their work. And then lastly, very importantly, something that always gets overlooked is the requirements, expectations of other parties involved in the process, whether it's capital raise, IPO, there could be bankers, underwriters, exchanges, right? What kind of firm would they expect to be as a representative, the auditor of the company? Right? We had a client that had to switch to us, who had to redo and re-audit 2 years of their financial statements because their bankers were not satisfied with a small firm being there as the company's accountant. So what I would say, look currently, what are the requirements? What kind of firm you want to represent and be the auditor of your company, as well as in the future, 2 years from now. If you plan a significant capital raise, would you need a significantly more comprehensive audit procedures? Does that firm that you selected, would they be satisfied?
Let me perhaps add also, I agree with everything you said, and let me also perhaps add another angle to it, my own personal opinion. When you buy an audit, you're actually buying two things that have nothing to do with one another. You're buying the work, and the cost of the work, if everybody did what they were supposed to, I don't really think there'd be a big difference between Price Waterhouse, Markham, or even a sole practitioner if everybody did what they were supposed to do and the regulators accepted it. The other part that you're buying is you're actually renting the firm's brand name and reputation and credibility to market your company. And that's the big part of it. And when you're looking for an auditor, for instance, when I look at a company and the company is not raising money, the stock price is low, there's not much need for them to hire a firm like Price Waterhouse because it's not going to do anything for them. And they just need a firm that's going to be able to meet the requirements and file what needs to get filed. If you're a firm that wants to raise money, the public markets are all about credibility. And I think that's the real key. One of the things that I think is really great about our firm is, as you mentioned, we're very client-centric. We try to understand what our clients need, and we try to deliver that to them. So I think you have to look at your needs. Who are you raising money from? Who are the investors? What are they looking for? And try to match that kind of level of credibility to what you're going to do. If you're going to go raise $4 or $5 billion, then you're pretty much limited to the big four. But if you're going to go raise 400 or 500 million or even $1 billion, then you may want to take a look at a firm like ours because that's what we do.
Yeah.
Right. And Brian,
to add to that, actually, Neil, before we go further, one of the other things that adds to our credibility is, we've got specialist departments within the firm, like specialized tax departments and specialized valuation departments that enable our audit to proceed forward without having to use outside specialists. That helps with, the timing of the audit and the price of the audit, where we're not reaching out to these third parties and having to schedule with them. We have a little more control over that. And you get good value when you have a firm that knows, when to bring in their specialists.
right. And Sviatlana, I know one of the reasons why we did the merger with Markham, beside using their resources and technology, we were really interested with the work we are doing in a national office. Do you want to make a comment on that? Like what a national office means to a company or an accounting firm?
There's a reputation about national office as a black hole that sometimes takes a lot of times to get through as far as the complex memo, etc. What we found out at Markham, everyone is very personable. I always know there's no such thing as a black hole national office. I always know who the specialist is. They have a great team of subject matter experts. I always know who will be reviewing my memo, who I can communicate directly. And it's a really great process to be able to piggyback of their expertise and without doing the significant research myself. We know a lot to be dangerous, right? But it always is great to have someone else who is an expert to take a look at, make sure that the accounting is proper. So that's been very helpful. Something we, as part of Friedman, didn't have to invest significant resources because we could just use what Markham had, and we found it very beneficial for our clients. I myself have a client that is going public, and we have, of course, that warrant issue where we had the national team look at it, and it just took me a few days, and we're ready to go. So that was very, very good resource that we have.
Yeah, and when we did that large IPO last year, when Bank of America came in as a banker, I think I had to write a 126-page memo where they finally approved us. And now I don't think we'll have that problem anymore. Being, I'm really proud. Let me finish of being part of the 12th largest firm out of. There's only 1,800 firms out there right now that do public work, and the smaller firms. I was a small firm one time ago, and
we all were, Neil.
yes, Drew had Bernstein and Pinchuk, except for Brian. He was at Deloitte, but
Never heard of them.
we've come such a long way, and I'm so blessed and thankful to still be here. I mean, I'm probably, I don't know how old Drew is, but I know I always say I'm the oldest guy now, and I love to say that even on video. Anyway, let's continue. I'm going to move around a little bit. Brian, you talked a little about, the doing some audit work for remote, but what are the challenges that, the companies, they used to call you and go, Levine, can you get this done in 6 weeks or 8 weeks? What's going on with the students here in the U.S. and the accounting workforce? And, why is it so hard for firms to, commit to, I mean, we're 3,600 people now and we're busy. We'll call office after office and maybe outsource things, but give us what's going on in the world right now.
Well, I guess, you had this this COVID mentality that came in after everyone was told to work from home for months on end, some people for years on end, and they're finding it hard to come back to the office, especially in the cities, where they're not looking to get into mass transit and expose themselves to germs yet. Some of our suburban offices are having an easier time with that. I know my office has been back full force since June of 2020, so that's been helpful. But what we've seen, is that it makes it harder with some of the remote staff to get them trained, for them to learn as much as they used to when they're sitting there next to us at an audit. We're at a client site and learning that company. And I think that's one of the struggles that all companies are having nowadays is, bringing on new people to your company and not having them, engrossed in the company itself and just being out there on their own devices at home. You don't know when they're working, exactly. And the communication that you have with them is limited to, 1 hour Zoom blocks, in a day. So it makes it very difficult for people to get up to speed and to stay relevant. I know there's been a lot of news lately. I think Twitter's mandating their people to come back, or at least they're trying to. And I think that's actually the direction you're going to start seeing companies go. You're not going to get 100% of people back into the workforce. Into the office anytime soon. But I think companies are starting to realize that this model where everyone's remote all the time is not beneficial to to team building. And you're going to start seeing them coming back, I think, little by little. And I think you'll see companies, especially in the audit side, that get their people back and working as a team will be more successful than those that don't.
I don't think, Neil, it's not going to go back to the way it was.
Yeah,
that's for sure. And there's no reason it should. I mean, if you remember when we started in accounting, Neil, we used to come into the office every Saturday and Sunday practically during busy season.
Wait, my office still does that, Drew.
Well, I know, but Neil, given the technology that you have today, there's no reason for that, right? Our staff would rather do 3 or 4 hours of work on a Saturday morning and go do errands and be with their family in the afternoon and maybe catch up other times rather than commuting back to the city. So we're never going to go back to where we were. And our practice is kind of hybrid that way because we work over 7,500 miles away. But what I can tell you, I've been out this year a lot. I've made probably 4 trips to Southeast Asia, probably 4 or 5 trips to Europe and also around the States. And I would caution people, don't underestimate the value of being face to face with somebody.
Yeah.
You know, I've learned so much just by going to so many of these meetings, you know, that I've been to. And it's not just the foreign meetings. Last couple of weeks, I've been out to lunch almost every day with different VC funds, hedge funds, banks and stuff. And I've learned so much just from meeting people face to face. So I think it's going to be a combination, and it's going to be different for every business.
Yeah, thank you. I have another question for Drew, but I'm going to come back to him. Sviatlana, I wanted to ask you, let's get a little technical here. I had some questions about some accounting standards that may be effective in 2023. You know, there's the CECL, the credit losses. There's a ASC 842 for private companies, which you can tell me what that is. And some of the ESG trends that we talked about last time, maybe you want to make a few comments. I know we're running out of time, but I wanted to get something technical in today.
Yeah, sure. The credit model is going to be one of the most significant pronouncements that will be effective obviously for accelerated filers, but out of other pronouncements, those would be the most significant ones. I don't expect a lot of difficulties in adopting lease accounting. Most of the, if not all of the public filers already adopted that. We as auditors didn't really have any significant challenges in the companies adopting them. The calculations are relatively simple. And as Brian mentioned before, PCAOB and regulators typically look at any significant assumptions or estimates, and discount rate is the most significant assumptions, relatively easy to determine and audit. So I don't think that will be a year for any significant adoptions or something that would be very difficult to achieve.
Thank you. And Brian, we were just talking, I think at lunch today, that, you know, in the, I don't know, 5 years ago, 10 years ago, we were pretty fortunate to get companies that traded on NASDAQ and New York. And now, of course, with Friedman and then at Markham, mostly all our companies, you know, aspire to be on a top exchange. But this is a MicroCap conference. I took note that out of the 50 companies that I did go through, there aren't many on the OTC. There's a couple companies from Australia that may double list, same thing with Canada. But what's going on with the pink sheets? I mean, I know you can't trade them. There's something now called an expert market. If there's not a company in there and it's a shell, I mean, there are people out there, and what advice can we give them to hurry up and uplist or do something? Because I think the OTC, I don't know, it doesn't seem that promising.
Yeah, I mean, you know, we did talk a little bit about this at lunch, where the OTC is starting to break out these shell companies and starting to not delist them from there, but they're moving this separate market for them. I think that companies are going to find it not worth their while to be public on those pink sheets. They're going to want to either go private somehow, or they're going to want to figure out a way to raise money and get up on the NASDAQ or something bigger like the New York Stock Exchange. Just because it's not worth it. It's not worth the expense, the audit hassle, having to keep reporting all these quarters, if you're going to be down on those markets where you can't get traded anyways.
Yeah, and it's very hard unless you have some good money in a brokerage account to trade some of those stocks.
Yeah.
So we'll be happy to, we've set up maybe 10 meetings with some of the companies that we know are going to be at the conference out of the 50, and I'm going to give everybody a chance to let these companies know how they can contact us. So Drew, I have another question. We've been fortunate to pick up some business in Malaysia, right? Esports companies, and it just seems like where it used to be China, now we're getting a lot of companies and a lot of calls. So not being that great with geography, Malaysia's where, and help me out here.
Neil, you want to laugh? Last partners meeting, I asked 7 Markham partners if they can name one country in Southeast Asia other than Vietnam. And
Right.
it was only the partner that actually lived most of his life in Iowa that was able to do it.
Yes.
And I even reminded them of the movie Crazy Rich Asians. And then they all remembered that took place in Singapore, but they thought it was an island off India.
Yeah. So are
no,
we seeing
actually,
any specialized industries coming out of there?
Well, actually, Southeast Asia is a very, particularly for Americans, it's a little known part of the world. Indonesia, I know everybody understands it's a bunch of islands, but it encompasses almost 18,000 islands. That's how large it is. Now, granted, about 70% of the population live on only 9 of them, but it covers a large, area. And the types of companies we're seeing there, you're not finding what I call the mega unicorns, the Apples, Tencents, Alibabas, but what we're seeing a lot of are companies like consumer tech, fintech, green tech, because in that part of the world, global warming is felt much more and they understand it much more. Education industry in places like Indonesia, because the income level was so low there. And when, a country like Indonesia, when you double your income from, say, 4,000 to 8,000, 100% of that goes back into the economy. And I wouldn't stand here and tell you that Southeast Asia is going to be a replacement for China, because nothing can replace the kind of scope and depth of China. But given right now that deal sizes have come down greatly, we used to be doing an average SPAC was, say, 300 million. Well, we're doing SPACs now for 30 million. And given the deal sizes have come down and you have over 500 SPACs out there still looking for targets, people are willing to look further for companies of value. And that means you're looking in Southeast Asia. And like I said, Southeast Asia to us, number 1 on the list would be Singapore, because it's not only the financial capital for the region, it's also the technology capital for the region, and also has the highest level of professional services. Next on the list would obviously be places like Indonesia. We're seeing work now in Vietnam. We are working in places like Malaysia, and we're looking in Philippines right now too. So that kind of maps it out for you.
Right. Thank you.
A lot of the local exchanges, I don't think that you're going to see a tremendous flow of public companies, coming from there. It's going to be slow, because at the moment, a lot of the local exchanges there have these kind of tax and financial incentives to keep these companies home. But I think they're going to outgrow the local exchanges because there's not a lot of liquidity down there. And eventually they'll come to the US, I believe, because of the enormous depth and diversity that we have in being able to raise capital.
Right. So they want me to wrap up, but I do have another question, and I'm going to ask to the whole group. So with 500 SPACs possibly out there that have this money, we've gotten calls of companies that, may want to go there. What if a SPAC, what if a company only needs 30 million, Drew or Sviatlana or Brian, and the SPAC has can the SPAC give back 70 million and use 30 million? Or when they raised 100 million, does the whole 100 million go back? Because people are going to ask me that because we're getting calls now. Some are smaller and they don't need 100 million, but with the 500 SPACs that are out there that are either going to be extended or expire, where's all that money going to go? That's just a question for the world, right?
Stevani, want to take a shot at it?
I mean, Sviatlana,
What?
what's going to happen with all these SPACs that we have companies to put there, but what if their valuation is 50 million and it's got 100 million in cash? Are they still going to do the deal, or maybe we don't know?
I guess we don't know.
Oh, how about Mr. Deloitte?
Yeah, I'm an auditor. I'm not a deal guy, so.
Okay. So anyway, guys, Bobby wants me to wrap up. So, Sviatlana, if someone on this call wants to get in touch with you, how do they do that?
Absolutely. Just go at MarcumLLP.com and all of the partners right there. Feel free to reach out. My name is Sviatlana LiPuma. We have Mr. Neil Levine, Brian Kearns, and Drew Bernstein. Please feel free to reach out.
Okay. Anybody else with a final word?
Thank you, Neil, and I wish everybody a wonderful holiday.
Yes.
Thanks so much. Bobby, are you coming back on?
Yes, thank you all very much for participating. I'd like to echo Drew's statements there as well. So have a happy holiday and thank you all.
Bobby, send my love to mom and dad.
Of course, we'll do.
All right.